The retail names are under pressure today after high inflation and tanking consumer sentiment reports. ETFs tracking the sector down 2 to 3.5%. The only components of these in the green are the staples like supermarkets and groceries. And today, Bank of America is out with a new report showing that consumers are planning to tighten their spending in discretionary categories. That includes restaurants and travel, the reopening beneficiaries. Liz Suzuki put out the report. She is senior hardlines retail analyst at BofA's Securities, and she joins us now. Liz, welcome. But maybe the biggest surprise is actually, home spending holding up.
Yeah, well, thank you, Kelly. Thanks for having me back. And, I've presented this survey before, and it's always been really interesting to track throughout the pandemic how consumers' spending behavior or their spending plans have shifted. And so it's interesting to see that we did see a pullback in this latest run of data, which, the survey ran for the first week of June, so very timely. And we saw that compared to March, there was a shift in how consumers plan to spend going forward, and that basically anything discretionary, furnishings, travel, and restaurants, too. We saw a pullback in consumers' intentions to spend. One area that was a bright spot, though, was home improvement, which is really interesting to track. It's been one of the strongest categories in retail. It was one of the strongest categories this earnings season as well. When we saw Home Depot beating and raising estimates, we saw Lowe's coming out with strong results as well, relative to the rest of retail, where we saw some other, some signs of weakness. So I think that this is a sector that is still holding up well. You've got strong home price appreciation and other really important metrics that, and the stocks have gotten caught up in this rout of housing, maybe unduly.
Yeah, no, and you highlight, look, Floor and Decor, Home Depot, Leslie's, Lowe's, even, some of the other names that are more, exposed, Bath and Body Works, Williams-Sonoma. I mean, these are some places to perhaps look for some strength. As we ponder, though, what this future is going to hold, here's what Howard Schultz just had to say about the difficulty that he's had in getting people to come back into the office. We want to know the extent to which this is playing in with the themes you're discussing. Here's what he told Andrew Ross Sorkin at DealBook DC yesterday.
I have been unsuccessful, despite everything I've tried to do, to get our people back to work.
You want them back. I mean,
I want them back. I pleaded with them. I said, I'll get on my knees. I'll do push-ups, whatever you want. Come back. No, they are not coming back at the level I want them to. And we're a very collaborative, creative group. And I realize that I'm an old school person, and this is a different generation. And I've been schooled by our people. Don't say too much. We have to establish a new way of working. And I've embraced it.
So, Liz, people are not afraid to tell Howard Schultz no, I guess, but how does that play into your findings?
Yeah, it was interesting because one area where we saw a bit of a shift in this quarter survey was that when we asked whether consumers prefer to work from home, previously we had seen, I think it was 92% had said yes in March. That fell to 68% in June. So we did see a bit of a shift in preference to come back to the office in this survey.
Let's turn to some of the other segments here. When you say that they're pulling back on consumer discretionary, again, this is data from last week, so it captures the gas price impact. Where are people pulling back the most?
Yeah, so, in my coverage in hardline retail, we definitely saw this in furnishings. So that was, and furnishings and home goods, too. So, we're actually more cautious on the names in that space, being, Bed Bath & Beyond, Williams-Sonoma, and Big Lots as well. So, we've started to see some of the evidence in their reported numbers. Williams-Sonoma is an exception where, they've still sounded pretty good, but a lot of that backlog in demand is really from prior orders. I don't know if you've tried to order any furniture in the recent past, but it takes quite a long time. So when those deliveries actually happen, that's when it gets captured in the sales. And so what we may be seeing in the strength is really orders that happened, maybe even 6 months ago that haven't, so we might not be capturing the full current demand picture when we're seeing earnings from these companies right now. So it could be a sign of things to come in the future.
And that you can't, paint the whole sector with a broad brush, that there are parts that are going to underperform here. Finally, the auto parts retailers, you think that as people do start peeling back to the office, that they should see a benefit?
That's right. Yeah. So not just auto parts retailers like Advance Auto Parts or O'Reilly, but the auto service providers as well. So, Driven Brands, which is the largest operator of service franchises across the U.S. with brands like Meineke and Maaco and Take 5. I mean, these are when people actually start getting back on the road and unfortunately start getting in accidents again as well. Like the service providers are going to have a pretty big benefit.
Well, again, to have data this timely, it's hard for everyone to figure out the landscape, so it helps when the consumer just tells us what their plans are. Liz, thanks for bringing that to us along with the stocks implied. We appreciate it.
Thank you.
Liz Suzuki with BofA.